What's up everybody, Ben here, and today we're going to be discussing directors' salaries and basically why they work, how they work, and what yours should be as well. So if you're a limited company director and maybe you've already got your director salary set up, but you don't really know why or understand why, your accountant's just told you this is what we're doing and that's why, in this video I'm going to explain exactly why that's the case. So there's kind of three different kind of templates as they are. So the first one is going to be the 12,570, the £12,570 salary, which uses your personal allowance and it goes up to the employee's NI threshold. And obviously this is all for 24-25. Things can change for future tax years, so I'll do an updated one if so. Yeah, at the moment for the foreseeable, this isn't going to change, so this is all going to be relevant. So that £12,570 salary, that is £1,047.50 per month, and that will basically mean as long as there's one other person in the business with you, so maybe it's two directors, maybe it's an employee and yourself, maybe you've got a team of 5 and yourself as well, that's absolutely fine. This will work, and basically you'll have your £12,000 salary. Everything else will be taken as dividends, which we'll explain a little bit later. And yeah, basically that £12,000 salary, you'll have no national insurance to pay on it for your employee national insurance, and you won't have any income tax to pay on it either. So really good and a no-brainer, because you actually get tax relief on that 12,570 as well. At least 19% in corporation tax, could be as high as 26.5% relief on that as well. So really, really worth doing. The reason why this works is that there's a thing called the employer's NI allowance, and it basically gives you £5,000 of employer's NI, which is the 13.8% on salaries above £9,100. It gives you £5,000 worth of that as credit, basically, to use up during the year. Now, if you've got other employees, maybe a small team, a couple of you, you're not really going to be breaking into that 5K. It depends on the salary levels. This can be quite subjective. If you've got 4 people earning 40, 50K each, and then there's yourself and your 12 grand salary, you're probably going to be crossing out over that 5K at some point anyway. But if there's only a couple of you, and it really depends there, but generally, you're going to get most of that employer's NI kind of offset against that 5K. And so especially if you've got a small team or you're just starting out, that is really useful. And it just means that claim the higher salary, get a little bit of extra relief there and not have to pay any extra national insurance, and you get the corporation tax benefits. That's why we want to do this, because you're going to be lowering your corporation tax. Obviously, if you're in a loss, it's not as important. You are going to be able to carry losses forward. So it's not a waste. It's not like you have to be profitable to do this, but obviously you'll see the results sooner if you are profitable, because it will literally come off as an expense on your profit and loss. It will lower your profits and it will mean you'll pay less tax. And this is kind of the bread and butter, the 12,570, the dividends up to 50K. It means that you can earn the £50,270 in total right up to the higher rate bracket, but you pay 8.75% on the dividends, you pay nothing on the salary. And so effectively you can earn this 50K amount, right? And only pay just over 3K in self-assessment tax, which is insane. It's like 7% roughly effective tax bill, which is insane. For those who are sole directors, we would still recommend this, especially if you are a profitable business, but there's going to be a little bit of NI to pay. However, that NI that you would have to pay will be worth it, because it will offset against your corporation tax, and you'll actually pay less corporation tax and still be able to take out that money from the company itself, and that's only a win, right? The employer's NI relief of that £5,000 is only eligible if you have at least 2 employees, and that could be 2 directors, like I said, it could be 1 employee, 1 director, but if it's just yourself on your own, then you're not going to be eligible for that, and that's absolutely fine. You can still pay yourself the 12,570 salary. You would still have the 104,750 a month salary on your pay slip coming through every month. That's not a problem. What you'll find is that April to November in the payroll calendar tax year, you won't really have anything on it. You'll get 104,750. You'll get that on your pay slip. You'll get that as your net pay. You pay yourself that, not a problem. Then we'll get to December and you'll start to have a bit of an employer's national insurance that you need to pay over to HMRC. And that will stay the same for January, February, and March. And then in April, it will reset. And this is basically because directors' national insurance is calculated on an annual kind of climbing basis once you pass the threshold, not on a month-to-month basis of, oh, you're going to pass this, so you're going to pay 12 equal amounts. Directors will actually use up their secondary threshold 9,100 allowance, as it were, which is where the point of employer's NI starts to become due. So it doesn't go up to 12,570 like employees NI and the income tax threshold does. The secondary threshold is set at 9,100, which is what governs when employer's NI is basically payable. And so obviously, as you can see, that comes in at 9,100 instead of 12,570. So normally it's in your December pay packet. If you do April to November, you're just under 9,100. And then in December, you start to cross over that 9,100 and you'll have a little bit of employer's NI. And in January, February, March, you will continue to have that as well, because now you're kind of going from 9,100 to 12,570 and you're in the zone that the employer's NI is due. In this method, you would then have a monthly payment to make in December, January, February, and March to HMRC by the 22nd of the month after your pay run. So if you're running from the 1st of December to the 31st of December, then your tax for December is due on the 22nd of January. 1st to the 31st of January, due on the 22nd of February, and so on and so forth. So you might be thinking, what's the point? How am I saving money if I'm having to pay the NI? Well, by having the higher salary, you're getting an extra £3,470. That is the difference between the £12,570 salary and the 9,100 kind of threshold. And that 3,470 is taxed at 13.8% for the employer's NI. Now that's £478.86. However, you're a profitable company, you're going to have corporation tax to pay. By having the extra £3,470 and the £478.86 of employer's NI, that combined together, that's an extra cost that's going to go in your profit and loss. And that's going to save you an additional £750 corporation tax. That means if you do the 750 less the 478, you're going to get £271 and 14p of benefit there, basically. Extra tax efficiency. It is fine margins. Some people just will be like, I'm not bothering doing 4 payments each year for 271 quid. But like I said, if you're profitable, it's all tax savings at the end of the day. That's money that's in your pocket. It's not going to the tax man. That is legitimate tax savings that you can have in your company, and it all adds up. Like I said, if you're in a loss position, there is less advantage with this, because although the same rules apply, you'll still get the the 750 tax deduction. You're still going to be better off by £271, but that's more on a paper basis. You aren't actually having to pay any tax relief or anything currently, so you're more kind of banking that tax relief, because obviously losses move forward, so they'll just roll into the next year. So obviously if you have a super profitable year next year, you've had a loss in your first year, might still be worth doing, because you know things are going to get better, you're going to be profitable in the next year, and you're just kind of delaying it and getting your relief in the following year, but you're claiming it all now. That's absolutely fine. If you've been in a loss for a couple of years, you don't really, or your first year, and you don't see that turning around in the next year, it's more than a decision of, do I want the future tax saving of £271, or do I want to have the cash flow advantage of £478, which is what you'd have to pay to HMRC for the privilege of saving the £271, if that makes sense. It might be better then to have the lower salary, which is going to be the third option we're going to go into in a second. This is not something I can decide for you. It's something to discuss with your accountant or have a look at and to see where you think you are. Obviously, there'll be a link below to book in a discovery call if you want to discuss your accounting needs. Maybe you are a limited company, you haven't sorted any of this out, or you're not happy with what you're currently doing. More than welcome to book in a call and we can see if we can help you out. Anyway, plugging aside, third option. Now, this is the nice, easy, standard, we're not worrying about anything. It's the simplest option. It's the option that you don't need to then worry about anything. And it's basically going up to that secondary threshold, that £9,100 that I mentioned before. So any director on a £9,100 salary will have, which is £758 a month, by the way, you will not have any national insurance, any tax, or any employer's national insurance either. You won't have anything. Like, that's fine. £9,100, $758 per month. You get corporation tax relief on that £9,100. It's nice and simple. You don't need to worry about anything. That's going to be the default. You don't want to be doing the payments in December, January, February, March. The great thing with this is that you paid nothing. You get £9,100 out of your company and into your personal bank account tax-free, and it still counts towards your national insurance. So you still get your qualifying year, which means you're still eligible for your state pension, and you get the corporation tax relief on it as well. So it really is a win-win-win. If you've got other employees, it's safe to bump it up to the 12,570. And if it is just you on your own, but you're profitable, then instead of doing the 9,100, you can bump it up to 12,570, and December to March, you've got a few payments to make. But if you're in a loss position or you don't want to be dealing with making payments or having to do any of that, maybe you do the payroll yourself and you don't want to be having to remember that and stuff like that, then 9,100 is where you want to be. That's going to be the base level default. You shouldn't be any lower. And I would say every director in a limited company, and that's their only company, they don't have any other sources of income, it's well worth doing this. It will save you. That 9,100 is going to be a minimum of 19% corporation tax relief, and it's tax-free income for you. Don't miss out on that opportunity. Obviously, the caveats, if you are employed elsewhere, maybe this is your company is a hobby at the moment and you're trying to build it up as a side hustle, you're trying to get it to the point that it replaces your job, you probably shouldn't have a salary. The director's salary is only tax efficient when you don't have another salary. So just something to bear in mind there. And likewise, it's worth considering if you do have like a sole tradership, or you have buy-to-let properties and you're a landlord or something like that. Many permutations. So please do discuss with your accountant. If you don't have an accountant, recommend you seek one out. Obviously, I am biased because I am one myself. There is a link below that you can book in a chat if you'd like. But at the very least, I hope this video helped. I hope it cleared up why the director's salaries are the way they are. It's not just a random figure we've plucked out the air. It is calculated to save you the most tax as possible. Any questions, please let me know. Please like, comment, subscribe, all that YouTube jazz. Thank you so much for watching. I'll see you guys in the next video. Take care.